Okay, so we're gonna look at this mixed-use building in prime Williamsburg, 4,125 square feet, 33% leased retail building. This is kind of unusual that people put a percentage. So let's just take a look at the summary. This excellent brick four-family with two commercial mixed use is located on Graham Avenue, surrounded by many shops and business. Conveniently located just a half block from L train and the bus lines. This property has 4 residential units composed of 2-bedroom, all without a lease. So here, the person is trying to say the owner is letting the residential tenants, pay month to month. And 2 commercial stores. Stucco is 2 years old, gas boiler is 5 years old, and hot water heater is brand new. Zoning R7A, C2-4. Okay, so let's look at here if there is more information. What is important is the building size, 4,125. It's built 1920, and building has 3 stories. Okay, so how we look at this investment? What do we need to know? What do we need to ask in order to find out if the property makes investment value? So the building has 4 apartments with 2 stores, I believe 2 stores. It doesn't, yes, it says 2 commercial mixed use. Okay, 2 stores. So the 33%, I believe, is 33% of the total retail income. So that means one store is generating more income than the other store, and that's why the other store is vacant. But we only lost 1/3 of the rental income. Okay, so upstairs 4 apartments are paying rents month to month. So we're not too sure why the owner is not giving leases. The reason I can think of, one is the tenants are paying little below the market, and because the seller is selling, so he's telling the buyer that the buyer will be able to collect more rental income from upstairs. Okay, another reason can be the building has additional air rights. So the seller is thinking that a potential buyer can maybe in the future build additional floors on top. So that's why he's keeping month to month lease. Okay, so now what we need to calculate is using the selling price, 4 million, and to see how much down payment the buyer needs to put down. Let's say if I'm buying the property, and because the vacant store, I probably will need to put down more than what I like to. So let's say 30-40% as usually the down payment percentage. So now I might have to put down 50%. Okay, so the down payment, right? When we calculate, then we calculate what is against the down payment is the cash flow from the building. So the rental income from upstairs and downstairs. So right now we have a vacant store, and how we should calculate this before we purchase the property. I will do 2 calculations. One is without the vacant store value, to calculate the current rental income, gross income, and net income, and that will be compared with my down payment to see the cash on cash percentage. And depends on the location, the cash on cash rate, it should not be look at it at the same. and this is in Williamsburg, so the cash on cash will be a little bit lower. Okay, then the other calculation is when the store is being leased, and upstairs if the rents are below the market right now. So at the market rate, upstairs and downstairs, what is my potential cash flow will be, and that compare with my down payment, what's the future cash flow will look like. That's pretty much how I will do the calculation and see if this is an investment that makes sense. Another thing I would definitely like to know is the frontage of the building, the lot size, which doesn't say here, the building size is 25 by 100, and building is, let's say, 25 by 65. So that's important to know to see if the building has air rights, if I can maybe build extension in the back, or what I can do in the future with this property. Okay, so that's about it, and I will see you next time at the different property.